Welcome to a Saturday morning, and thank you for joining us here on the reality of real estate. Cynthia Hash, a realtor, inviting us in to talk with her a little bit about what's going on in the world around, and housing is the thing these days. Cynthia, how are you doing today?
Doing great, doing great. Hope you are as well. I do have a guest that his name is Dalton Campbell. He's been on before. He's a very knowledgeable financial advisor, and he is with Anchor Financial Group. And you can reach him by emailing dcampbell at anchor dot dash financial.com. Anyway, he sends me his great monthly emails, and I enjoy reading them, and always it provokes extra thought, right? So, Dalton, welcome. We'd like to hear from you. Uh,
Yeah, thank you very much. Thanks for having me. Like Cynthia said, I'm a financial advisor. I'm with Cetera Advisors. Anchor Financial Group is a branch of them. So Cetera Advisors, registered broker dealer, member of FINRA, SIPC, and they offer securities and insurance products. But yeah, I appreciate you guys having me on. Happy to help.
Absolutely. We are in a position where, the outlook of things are, people are just up in the air. They don't know what's going on. They only hear bits and pieces in the news, and half the time the news is wrong. And so I'd like to try and figure this out. I kind of wanted to know how the second quarter outlook that you had mentioned before about steering through uncertainty. How is that now that we're beyond that a bit? How much of this is have things been turning into more optimistic viewpoints? Have they been shifting downward into, less optimistic? How are things like that going? What do you see?
Yeah, I think it depends on who you ask. If you look at someone like me who's just inundated with this type of stuff all day long, or even someone in the real estate industry, which real estate's operating maybe a little bit differently than traditional investments are right now, but um, in our world, you know, not everybody. This isn't blanket advice for everybody. Obviously, none of this is going to be financial advice, but stay the course was really the main thing that analysts were saying to do in Q1 and Q2 when we saw some volatility around the tariffs. At some point, that stuff has to work itself out. And for the most part, it has. I mean, we've seen markets hit an all-time high over the last few weeks, and the last few 4 or 5 days, it's sold off a little bit and slid down a little. But all in all, in theory, people should I would say be relatively pleased with how the year's been so far if they just kind of stayed put and trusted their gut. Um, whether or not people are optimistic, like I said, I think it depends on who you ask. One side of the two is always going to be pessimistic. That's never going to be the case. But um, I think there's a lot of positives. I mean, the Federal Reserve says that it's likely they're going to reduce rates over the next year or so, whether they do it next month or whether they do it in 6 months. They haven't said they're going to go up. So that tends to be a bullish indicator, both for our markets and for real estate. Um, Obviously the new tax bill, yeah, it raises the deficit, but that's a long-term issue they're going to have to figure out. In the short term, it's going to be good for corporations most likely, and that's going to be good, kind of all around. Most people are probably going to experience some tax savings there. So, um, I think position-wise, I think we're okay. But with such a complicated economy, there's always things that can go bad, and so I think uncertainty is just always going to be there, and it's important that you don't base the next 20 or 30 years of your life or big financial decisions on what you think is going to happen next month. I think that that's probably the
Yeah,
big take home from this year.
that's actually very good advice. And I know that corrections are a normal part of investing. So anything in real estate, anything with government spending, anything with economics in general, it's like when the tariff wars that are kind of ensuing, basically, these corrections had to be made. It had to be made. Our country was doomed for bankruptcy, collapse. We've always been unfairly treated by the rest of the world because we happen to be the richest country in the world. And so, do you this kind of goes to the no pain, no gain in the long run, that kind of idea. Does that make any sense?
It does. I think investors, home buy, people are always going to experience periods of economic pain. Um, my wife and I, we have a 7 month old. That's been a little painful, in the recent months on the pocketbook there. But you know, I think with people like in the financial markets, there was a lot of pain early on in the year, and there was a lot of fear. Um, we had a big sell-off in 2022. That entire year was just a long, drawn out, just slow death. That was a very bad year in the markets.
Mhm.
Um, but you have to look at, most investors, unless you're right at retirement or unless you've got some really short-term goal, most investors hopefully have enough runway where fluctuations should not bother you so much. I mean, markets are going to fluctuate for all different types of reasons. Real estate tends to fluctuate a lot slower. Stocks can fluctuate by the week, where real estate, it takes a while for some of these trends to play out. Um, but yeah, I mean, people who've been waiting for interest rates to go down for the last 2 years so they can buy a house. Well, when interest rates do go down, the value of that house is probably going to be way higher. So are you actually going to save money? Maybe not. And so you
Maybe not.
may as well just bought the house, and
Yeah.
refied in 10 years if rates went down or something. But um, the same with investing. People who are on the sidelines trying to catch the bottom, or people who are just waiting and they're like, oh, I need to sell because I think we're at the top. Maybe we are, maybe we're not, but like, what's your goal? What's your goal for the next 20 or 30 years? Do you think the property that you want to buy, do you think it's going to be more valuable in 30 years than it is today? And if you do, then okay, that would indicate making money on that investment, then maybe you should try it. Um, the same goes with our types of investments. People who are overly speculative, like you said at the beginning, they're operating on very limited information.
Yeah.
If I was a congressperson, we see how they do and we see how their investments do. If I was a congressperson, I would have a lot more data than I have even being in this industry. And so you have to operate on what the analysts say and what tends to be very fundamental practices.
But
And when people get away from that, that's when there's probably more pain than gain.
you basically just said insider trading is that's what concerns me with Congress is there's so much of that going on. And I thought that was illegal. I don't know. Maybe I'm ignorant.
Well, that's not an accusation. It's not. It's not even an allegation. I don't know. What I'm saying is, yes, there are Congress people who, their portfolios are public and they have performed really well. Maybe they're just great investors. I don't know. But
Mhm.
on the surface, when I look at it, somebody who deals with, you know, they can vote on things that just single-handedly shift the entire US economy, and they know how those things are probably going to play out. You know, they have now. Granted, there are probably restrictions on that and stuff. I don't know everything about that, but if I had that data, I would probably be more well informed as an
Yeah.
investor. And
Oh,
so,
I would say so.
yeah, I think the big institutions and people who have a lot of power play with a different. They have just more data and they have more tools than the people who don't. And so, for those retail investors, you know, instead of trying to speculate on things that you don't really even have all the information that everybody else might have, stick to the fundamentals, and that's where
Mhm.
working with an advisor, working with a realtor, working with someone who has a lot of experience in what you're trying to do, that's where that really pays off.
I agree. I think advice is great, and if it comes from your neighbor and they're not in those professions, it's probably not good advice.
Hmm.
And I would say that there have been a lot of people waiting on prices of homes to drop because there has to be a correction. There's
Mhm.
also a lot of people waiting for interest rates to drop because there needs to be a correction. And and you figure the prices of the homes are going up exponentially, or have been over the last few years, uh, because of basically the COVID boom is what I call it.
Mhm.
And but the interest rates have not gone up exponentially. It only went up a little bit, but you think first homes in the 1980s, you were lucky to get 11, 12, 13% interest rate. But
Mhm.
those homes cost probably one-tenth of what they cost now.
Sure. Sure.
And
Yeah.
so
Yeah.
it's kind of commensurate. But you mentioned you may as well go ahead and buy the house. I agree, because if you're looking at a 3 to 4% increase in equity for a normal market, then what I would suggest is, hey, if you know you're going to move in 3, 5, 7 years, then maybe go ahead and continue to rent.
Mhm.
But if you know you're going to stay, and
Mhm.
then think of it as staying for 20 years and you'll be
Right.
fine, because that equity it would be based on normal equity growth, right?
Right.
So so one thing I wanted to ask you about is I read something about a new legislation that was proposed last month,
Mhm.
and that was to take Wall Street out of the housing market. Is that even a thing?
Wall Street is in the housing market for sure.
Yeah.
There are a lot of big there are a lot of big uh, funds, REITs, companies like that that um, own a lot of residential real estate, and it became very much more problematic in 2020, 2021 when interest rates were super low. Um, and it's you know the assets that they own have appreciated so much in value, and they rent, obviously they rent those properties out. Has that contributed to a housing shortage? Probably so. In some ways, I think it has definitely contributed to the main problem that we have today, which is supply and demand. Even if interest rates come down, I don't see where prices can move a lot because there's just not a lot of houses. I mean,
Correct.
I can log into Zillow or Realtor.com or whatever, and I was talking to somebody the other day in Waynesboro where I live. It's like the same 30 houses. It's been the same 30 houses on there for the last 6 months. Every now and then you'll see a new house or you'll see one go away.
Hmm.
But
That's
it's
right.
like, but it's like this is stuff is not moving. And it's probably six, $700,000 price point. But that's kind of that problem area right now for the average American because 300,000, even with a 7% interest, a little bit of money down, is still low enough where a lot of people can swing that as a first time buy. Once you get to that six or seven, if they're moving, you sold me and my wife our house. We we can't sell that house ever,
Yeah. Yeah.
ever. So if we're going to move, we got to come up with cash somewhere else
Hmm.
because the financials are just too good in that house now, based on what our interest rate is and what it's appreciated to. So most families aren't able to accumulate that extra cash, so they got to sell that asset. But they're not prepared for their monthly bills to go up two, three, 4 grand a month.
Yes, exactly.
And so even if interest rates come down, I don't think we see the prices really go anywhere. And if you do like a mortgage calculator and you type in 5.5% versus 7%, you're going to save money on your mortgage, but it's not as much as you would think, actually, on like,
Okay. Hmm.
50, 30-year mortgage. Um, and so I just think it could maybe be an inventory problem. Now, Wall
Hmm.
Street, I think there probably should be restrictions on what companies can buy. But I don't know that there are necessarily those restrictions. And so taking Wall Street out of residential real estate, I think it could help for the everyday consumer. I don't know that it helps for shareholders of those companies, but it could help with the everyday consumer. So that's a tough decision to make.
It is, and I think with that legislation that was supposedly introduced last month, these big conglomerates, when they're buying up housing, they it does create a different kind of supply and demand. And so there, if you do have some sort of restrictions on who can buy how many, as far as like these big conglomerates that seem to just get richer and richer by the day
Hmm.
because of these things.
Hmm.
That means basically no. So I think it means not selling any mortgages too, because that's where a lot of the investors come in. They buy up these no more hedge funds, no these big investors. They may end up having to sell if this passes. I don't know if it will or not, but if this passes, those single family assets, let's say, it
Hmm.
would not be it would then be available to the general public,
Hmm.
to the people who want to have their a detached
Hmm.
single family type of home. And that's fantastic. Why is
Sure.
that fantastic? Because, well, it makes it more affordable for young adults. And
Hmm.
they'll have a much better chance of buying. And
Hmm.
frankly, going back to how things related equity wise versus interest rate wise versus price of housing wise, it also is relative in regards to how much people made,
Hmm.
people that are in their 60s now, how much they made in their 20s.
Yes.
But it's all commensurate. Uh, but it also makes a lot of these big conglomerates richer as you go along. In my opinion, I think they should be restricted in some way. I mean, I believe capitalism is a good thing, but I believe also in a way that perhaps it should be limited to apartment buildings.
Yeah, I was having a conversation with somebody about this recently, and they brought this up. They, I think, were being kind of a conspiracy theorist about it. So I won't get into what the source of the conversation was, but they were basically talking about one of these conglomerates that owned a bunch of real estate and bought it up, and that contributed to the part of the issue that we're seeing today. And I was like, just because there's a lot of things that you can do to make a lot of money.
Hmm.
And most people who are really experienced in their industry, they know what strings they can pull to make more money, right? But there's kind of this etiquette that this kind of unspoken set of rules that you probably should follow as a moral society. And one of those is just because you can make boatloads of money on something at someone else's expense doesn't mean that you should, um, even
Agreed.
if, even if it's legal.
Yeah.
Um, and I think that this might fall into one of those categories. Was what they did illegal? Well, obviously not. I guess not. They've bought all that real estate, but it has taken, you know, the the family with, two members who each make $80,000 6, 7 years ago. That was setting the world on fire. Today they
Hmm.
can't buy a house, and it's
Yep.
like they can't buy a house. Are you insane? They
Hmm.
can't buy a house. They got $160,000 of household income. Like,
Well, I will say this, it's taken a little bit longer for the mortgage industry to react to this.
yeah.
And that is they are increasing the limits of what you can make in order to get some of these uh, down payment assistance programs and things of that nature. It's slowly catching up. I wish it was a little bit faster, but that's government for you.
Sure. Yeah.
But I would say that also, you know, bucking that trend. And talking about international stock markets. They're beating stock markets by a wide margin so far this year. How long do you predict that will last?
That's hard to say. So international markets have been pretty disappointing for like the past decade, to the point where in a well-diversified portfolio, typically you've got all different types of market exposure and industry exposure and sector exposure. One of those would typically be international. I see a lot of portfolios that don't include international, and recently I see a lot of portfolios that may be over concentrated in international. Um, it's very, very hard to determine because the history has just been so inconsistent. If you look at US markets, it's a very mature marketplace. And so if you look at US markets, there are a lot of patterns that you can identify. Now, historical performance is no indication of the future.
Hmm.
But you can look back historically and notice a lot of patterns. And I don't know that many patterns exist the same way with international. And so, yes, international has been rock solid this year. Uh,
Hmm.
but the past few years, it's been very not good at all.
Yeah,
And so I don't know. I think that each individual person's going to have to make, with their advisor and their portfolio, kind of got to have to make their own guess on that because I can't even
sure.
begin to predict it.
Yeah,
Who
I
knows?
gotcha.
Who
Well,
knows?
and I'm also thinking too, and by the way, to connect with Dalton, you can send him an email, dcampbell at anchor-financial.com. And if you would like to listen to our recordings about the reality of real estate, go to findhomesrealty.com/podcast. So if if you if all of this stuff is happening right right now, and we are kind of still in a little bit of uncertainty, at the same time, it's that no pain, no gain is the way I'm looking at it,
Hmm.
you know, and but we're also in a correction period. When have we, in the past, we've had correction periods, right? We've had correction periods in the 2005 boom and the 2008 Great Recession, and these are all correction periods. Same thing with the COVID boom, saying, that kind of thing, and talking about in real estate. And so but I'm also thinking that once the tariff wars are settled and basically considered more evenly distributed as far as how unfair, we've been as a country paying tens, hundreds, thousands of times more to export to other countries that compared to how much the United States has been charged for how so little, we're charging so little in the past for other countries to export to us. I really think that is also a correction, and I believe that might be bringing more jobs back to the United States. I think that will end up helping in the long run, and I also think that it will help with real estate, if especially if that new legislation passes and there's some restrictions on these big conglomerates buying up Wall Street mortgages and things of that nature, and also buying up uh, single family separate homes, that kind of thing. So I really think that even though we're in a correction, we just have to hold on,
Hmm.
stay the course,
Hmm.
and hopefully not make mistakes. I've made my own, but hopefully not make mistakes and be able to come out the other end. What does concern me just a little bit on the side of looking at people who are buying houses right now, it's mostly Gen Zers and millennials, and those those folks, haven't been accustomed to the higher or the lower interest rate that everybody in during COVID times were
Hmm.
had.
Yeah.
So in my opinion, we're the person that's going to get hurt is going to be the person who spent too much for their house in during COVID because there was no inventory, and now want to sell, and but if and catching it before the correction actually the dust settles,
Hmm.
so to speak. Does that make any sense at all?
Yeah, it does. I think that I think I mean somebody like me, bought my house in 2019 and then refied my house in 2021 when interest rates were really low, um, we had talked about between the appreciation, what I could rent the property for if I wanted to rent it, and what I pay in a mortgage. If you were to write in a textbook like what a good rental property deal would be, that might be it. Um, and so it would be hard for me to sell that home. That also, I feel like, contributes to the problem because that's one less home that someone's going to be able to buy. If I have the ability to accumulate cash and then buy another home, it's not a swap, where
Hmm.
typically you got somebody that sells the house, which creates a new property for someone else, and then they buy the house. That swap's not going to happen because I'm keeping that house.
That's
And
right.
so I think a lot of people are going to be in that position. But if I look at Gen Z and millennials, I think the bigger thing is there's just so many important things to allocate money towards, and living
Mm,
life has gotten a little bit more expensive that you get this family who's making six, $7,000, you know, net of tax per month, and between groceries, having one or two kids,
yeah.
and a mortgage, okay, well, they might already be at 5 grand.
Yeah.
But what about retirement? So
Yeah.
that's where I see it on my side is people are like, oh, we just moved into a house. We can't contribute as much to our retirement. I'm like, okay, but unless your goals have changed, you know, we're going to have to change your goal or something. Because if you're going to put less in for the foreseeable future, we're probably not going to hit that goal that we originally set
Right.
based on the math of the way it was before. And so, um, some of those people are just never going to be able to step those contributions back up. And so, I think the term house poor, I think
Yeah.
more people are going to end up house poor maybe than before just because 2020 and 2021 was, man, what a crazy time to be in the
Yeah.
real estate or the mortgage industry, a fruitful time. Um, but it does come with consequences on the other side, a very sharp swing where now the interest rates are high and they're going to creep down maybe. Um, but the prices are also high. If the prices had
Mhm.
only appreciated 2.5, 3%, whatever the average is per year,
Right.
and the interest rates were high, we wouldn't have as much of an issue. But if you look at the appreciation on properties, I think the average appreciation on real estate the last 5 years has been like 10% or something, which is
It's
insane.
ridiculous. It's double, if not more, than what it should be.
And wage inflation has not increased at the same
At,
rate. And
at
so
this
so people
exactly.
so people who have those goals, they just can't financially swing it. Not, I think the solution to that is, you know, you mentioned capitalism. I highly encourage people if they've got an entrepreneurial bone in their body or a skill set that they enjoy is to
Mhm.
monetize it. If you're really into fitness, go get a personal training certification and take
Yeah.
on 3 clients a week, right?
Yeah.
If you are interested in, uh, you know, real estate, right?
Hmm.
Well, heck, pick up a license, go talk to Cynthia, join her team, something like that, right?
Yeah, that's right.
Sell 2 houses a year. Who cares? That's 12, 15 grand. That's 12, 15 grand you didn't have. And so
That's right.
do something as like some type of extra thing to bring in that revenue or um and there's probably more opportunities today to do
Mhm.
that, to have a side hustle or to generate additional income than perhaps there have ever been. Um, I mean, shoot, these days I could take a picture of this pen and I don't know,
Put it on Amazon, I
yeah,
know.
somebody'd pay 100 grand for, it's like, I mean, these days
Yeah.
it's like easy. So I think that's really the solution is it's not, I don't think the costs are really going to go anywhere. I think people just have to figure out ways to generate some extra income.
Well, we only have a minute left, and I just wanted to make sure that
Yep.
we kind of encapsulated a couple of things, and that is, I agree with you in regards to if you're an entrepreneurial type of spirit, they, and quite frankly, Amazon has a way for you to be able to do something like that. It's hard work, but you do it, and you can do it.
Mhm.
And as a matter of fact, you can go to cynthiahash.com/teacher in order to get the principles of real estate class under your belt. So happy to do that for everybody. And if you need to have a really good financial advisor who has been in this for a long time and understands a lot of this and can help you your entire portfolio, go to Dalton Campbell, Anchor Financial Group, senior financial advisor, D Campbell, that's DCAMPBELL at Anchor, ANCHOR anchor-financial.com. So dcampbell at anchor-financial.com. Please go and get some of this good advice. He can be able to take that portfolio of yours already and or even start one for help you with those kinds of advice, pieces of advice. Because especially if you are an entrepreneur, you don't have a retirement plan. Realtors don't have a retirement plan.
Nor
You're self-employed.
we need you. We need you to stay in the business. So, so, everyone's. But that was great advice, Dalton, and thank you. That's well said about there's always a place to make some revenue to add to it, and I appreciate your insight on that.
Yeah, for sure.
And go to findhomesrealty.com/podcast to listen to all of our reality of real estate recordings. We really appreciate our listeners and thank you so much for our guests.
And share the podcast with other people too. Spread the love around. And Cynthia, you have a wonderful weekend.
Thank you. You
And
too.
Dalton, you as well.
All right. Thank you.